regulation is now consumer protection. You see these volumes at the top. Nigeria is almost hitting $60 billion in volumes. Kenya is right under $20 billion in transaction volumes.
Sorry, guys. Sorry. Allan, I think there's a Zoom link you need to join and then share your screen. Is your laptop is off?
My Wi-Fi.
Okay, fine. Okay, go on.
So we need to, as much as we in the innovation space and we're building, we need to have some radical empathy and appreciate that the products we are building have the potential of collapsing because of this. That if all the builders in this room, probably 30 plus companies here, are transacting 50% or 80% of the volumes here, if anything were to happen to the 30 companies here collectively, like if somebody was to walk in and hijack all of us or something of that nature, the potential of that kind of incidents has the potential of collapsing an economy. So that is one thing you need to understand. So economic policy and the monetary policy follow things that bear economic risk for nations. So sometimes when you're talking to regulators, you might be looking at it from a perspective of innovation. But then when all of you are looked at as a collective, the sector has significant economic and the monetary policy risk. So number one, consumer protection. Number two, economic and monetary policy risk. But number three, which was one of the biggest motivator of this conversation, as we now look at crypto adoption trend, was anti-money laundering and counterterrorism finance. But the sector has been aggressively flagged by the Financial Action Task Force as a sector that might be a conduit for AML and counterterrorism finance. Now, to that extent, Kenya is actually on the AML gray list. I've said this over and over, but I like just sharing that notice. So because Kenya is on the FATF gray list, it means whatever regulations that have to do with movement of money that are enacted in Kenya would, to some extent, be intrusive, for lack of better word. There'll be a lot of reporting requirements and a lot of compliance burdens. And it is because the sector has been actively used by bad players to do bad things. We've seen the industry trying to cure itself or heal itself from this. It's an active engagement that is ongoing with various regulators to demonstrate trust. From centralized perspective, we've seen stablecoin issuers like Circle and Tether freezing funds that are being that are purported to have been stolen or been involved in illicit activities. And most recently, which a lot of us came as a shock to a lot of us, we saw the Arbitrum Foundation, sort of the Arbitrum Security Council, freezing about $70 million of money that was involved in the RSF scandal, the hack scandal, whatever happened. So for me, it was actually interesting because my perspective was, because the chain is decentralized, money that is sitting in a non-custodial wallet cannot be frozen by anyone and reversed into a new wallet. But the industry has just demonstrated something different. So when you see such a thing happen, just also know that law enforcement agencies are taking note of such activity. So that is, to some extent, a bad signal for decentralization, because we thought decentralization is absolute decentralization without checks and balances. But to some extent, a good signal for the worries regulators have in terms of can money, the dirty money flowing through this ecosystem be recovered? So, as in, ecosystem players have just demonstrated that it can. So, if Arbitrum opened the door for that possibility, it means there might be an implication across regulatory agencies that any other player running chains can do that. So another important point to note as well. Now let's go to the act. So with those three factors, number one, consumer protection. Number two, the economic and monetary policy risk some of these products pose. And number three, the anti-money laundering and counterterrorism financing risks. We are put in a situation whereby the Kenyan government had to come up with a set of regulations, at least to protect the Kenyan consumers and at least to safeguard against AML and CTF. When we were engaging the regulators over the course of the last 2 years, a lot of the FTX collapses and similar collapses were heavily referred to the extent that I think, was it 2025 or 24, the CBEX $700 million scandal, was it last year? Yeah, it was, I think, Q1 last year, when we were just doing a workshop with the members of parliament. They were referencing that. So when you have a benchmark of such standards and bad player set, then you have regulations that are designed to eat up bad players, but to some extent hurt the good people. So we have a regulation right now, and I think some of us, Lance, Wambogo, and a bunch of us were with the National Treasury 2 weeks ago on 10th April to discuss the subsidiary legislation. So the act came into force last year, and 4th November 2025, and we have a moratorium period of up to 4th November 2026 to comply. A moratorium period just basically means a period for you to continue building until the moment the period ends, then you're actually required to build with a license in mind. But before I even go to the details of the regulations, this is a conversation I've been actively having with a lot of builders, Chiza, Ochi, Matu, and a lot of builders in the ecosystem. And it's important for me to start now the presentation from there. It's important for us to understand what exactly we are. And I think that is where a lot of the confusion comes in. The fact that you're building a blockchain solution does not mean you're advanced. There's anxiety and the panic of what even building a lending solution that uses blockchain, or an e-commerce solution that uses blockchain, or I'm building what are you building? The savings product, maybe. Yeah, you're building a savings product that uses blockchain. Does that, in principle, mean you're advanced? No. So there has been that confusion in the Web3 builder community, whereby the assumption has been that any Web3 product is a VASP and that all Web3 players require VASP license. No, node validators do not require VASP licenses. More for curators do not require VASP licenses. If you're Bitcoin miners do not, so and so on and so forth. So VASP license is somebody who is, from in a centralized perspective, actively providing some form of services to consumers. And we've been chatting, of course, very, very long with the on this. And what a service basically means is you have an app on Google Play Store, and this app, to some extent, is a wallet, is a custodial wallet, that if a Kenyan user downloaded, they would be holding their USDC or their stablecoin, other stablecoins, or their crypto on your wallet. So you have a custody risk. That means if your wallet collapsed with 2 billion shillings worth of user funds, you've cost the Kenyan economy a hit of 2 billion shillings. Then you're a VASP. If you are an exchange that, again, in a centralized way, provides trading, either spot, futures trading, and various other trading features to retail consumers or institutional consumers, then you're a VASP. And so on and so forth, including stablecoin issuance. If you want to issue a stablecoin, then you're a VASP. just to reiterate, so that is essentially what a VASP is, and I'll cover more in the next session just to shed more light to it. But the middle column and the last column is what I want to bring home on. If you're just building general blockchain solutions, like for instance, it's Safari and the Safari team decides to launch Safari DAO. There's just a DAO that does events and is self-organized people. Are they a VASP? No, they're just operating on DAO infrastructure and multi-sign custodial wallets. If you are building in healthcare or building any other solutions that do not actively take people's money, then you're not a VASP. You're just a blockchain infrastructure provider, and you do not need a license. That applies to all DeFi solutions, all decentralized finance protocols that are not listed. So if you're building your own version of Aave or Compound or Morpho, then you're not a VASP. If you are trying to be a curator on Morpho, curating lending markets, you're not a VASP. If you're trying to be a node validator on Lido, you're not a VASP. VASP are only these people listed. Ideally, a VASP will be someone who, if I was walking on Thika Road and see a billboard, them advertising their new exchange or something like that. But then there's the third column, which is building other regulated services that are not necessarily VASP services. So like, for instance, the example Chiza has mentioned on you're building a savings product. Like this savings product manifests themselves in various ways. A SACCO can actually be a savings product. So if you're a SACCO and this infrastructure is just designed for people to come, for SACCOs to come and save, you're a platform that's just building blockchain services for SACCOs. The farthest you can go then is to have a SACCO license. Like, I mean, some of us have a SACCO license with Alex. Alex has a SACCO license and Vuza is doing quite well. If you are thinking of building a lending company, then you're not a VASP. You're almost close to what Branch and Tala are doing. So that is digital lending provision. If you're thinking of building an insurance solution, shout out to Eddie who's just walked in. So you are either an insurance agent, an insurance broker, or an insurance service provider. Your solution just exists on the blockchain, but you're not a VASP. So then you now need to figure out where you fall. So then the whole message I'm passing here is don't let the hype of Web3 and blockchain sort of distract you from knowing what you actually are legally. Because sometimes the simplest answer is you're just a chama of 50 people and this solution is for chama members to work on. That is a DAO. Or the solution is you're just a SACCO that is allowing people to save on your SACCO and you can lend money to members. It's a SACCO that is running on blockchain. You're not a VASP. So it's important to share that light, because just to reiterate for those who have walked in the room, because of the anxiety and confusion that happens where builders think that all Web3 products are automatically VASPs. That is not the case. That allows for those to. Now, who are VASPs? Because now the regulation is meant to regulate VASPs. So VASPs are wallet providers, but not non-custodial wallet providers. Okay. So VASPs are wallet providers, but custodial wallet providers. You're posing a custody risk. So you've taken up the risk of holding probably $1 billion worth of custody, stablecoin, Bitcoin, and a bunch of other virtual assets. Then you'll require custodial service license issued by the central bank. Exchanges, you're already familiar with them. Payment processors, brokers, investment advisors, tokenization platforms. There's an interesting aspect on that which I'll cover later. And some of you are building solutions that provide infrastructure. So you're a backroom operator rather than being a front-facing service provider. So you need to be able to distinguish yourself whether you're a VASP or you're providing infrastructure that supports well. Now, to that extent, you have seen who regulates. So if I can ask, how many wallet providers are in the room who has actually built their own custodial wallet? You have the custodial wallet. yeah, then you are definitely averse. Is it wallet infrastructure or you're providing wallet as a service to consumers?
Wallet infrastructure.
So you're an infrastructure service provider.
Yeah.
So the idea will be to partner with somebody who is now using your infrastructure to provide service to their
Like turnkey.
yeah. So I'll cover on that infrastructure model later. But yes, there's a potential if you're an infrastructure service provider like Fireblocks and the rest or Lance, then what you're doing is just providing an infrastructure service to a bank that maybe is the one that needs to take up the custody license. So it's important to understand if you're an infrastructure service provider, you're selling your solution to a licensed entity. How many exchanges are you doing? Anyone building an exchange or an on-ramp, off-ramp platform? On-ramp, off-ramp.
Yeah.
How do we do your custody?
Yes, I saw what it's legal.
You as well.
Legal. We essentially each user unique wallet so they do that something.
Non-custodial, custodial. So non-custodial wallets. What about the fiat wallets?
We don't really, but
So it's just calling the M-Pesa push notifications and all that. So the only service you're providing is taking fiat for stablecoins and all that. Then that falls under the category of exchange, which again was an interesting point because the definition of the regulations of exchange is very broad, but it covers smaller players like Minicent, but at the same time covers bigger players like Binance. But anyone who is doing the service of conversion is an exchange. Do you do payment processing? People can send money on the platform. Does anyone do payment processing here? What do you do?
Okay. I do on and off now. And yeah, send process. Yeah.
And processing payments. So a user on your app can be able to send money to a user and another user outside your app and also within your app, both in Kenya and across the border, right? Stablecoin or it extends to any other virtual. Okay, then effectively you fall under a virtual asset service provider called a virtual asset payment processor regulated by the central bank. A brokerage, I think, brokerage and mostly OTC desks will be said to be doing brokerage. Does anyone plan to issue a Kenya shilling stablecoin? No? Yeah, the stablecoin conversation is also an interesting one. There's two approaches I've seen this because, and they're just speaking from a regulatory arbitrage perspective. Number one, if you're issuing your stablecoin so that Kenyan users can interact with your stablecoin and it's circulated widely, then you will require a stablecoin license. But if you're using stablecoin infrastructure or you're issuing a version of a stablecoin that is for in-house balance sheets, we've seen banks like JP Morgan do this, and like that is for your in-house balance sheet. It's not being circulated to users. It is just for balance sheet management and does not require active solicitation to anyone other than yourself. Then you're just using blockchain infrastructure to represent your balance sheet. So there might be a need to distinguish the level of infrastructure or service within which you want a stablecoin to operate. A stablecoin that is actively solicited to users, is a stablecoin that requires a VASP license. But a stablecoin that is for your own consumption and you're not distributing it to Kenyans, then will not need a VASP license. Talking of stablecoins, I think one of our friends, Machuche, is on the call, and I think shout out to him. You've seen the stablecoin on Base. NTZ has just been onboarded to the Tanzanian regulatory sandbox, and we are excited to see how that progresses. And does anyone have any questions with regard to yes, Lance?
Yeah, I wanted to know what is the exact legal difference between issuance and exchange?
Between stablecoin issuance.
Even token issuance,
Right?
Is an exchange an issuance platform, and is an issuance platform an exchange?
A token issuance an exchange would, from the perspective of the regulation, is someone like Binance, a platform where people actively trade. So an exchange is a token listing platform.
Yeah.
So they allow for listing. Issuance is done by yourself, and then you apply for listing as an exchange. So an exchange only does the listing. A token issuance platform, and this is with regards to RWS mostly, will be something close to what Centrifuge or Securitize do. They actually provide infrastructure that allows for financial institutions to come and issue their RWA tokens. So that is actually the token issuance platform. They're not an exchange.
It's not an exchange.
Yeah, an exchange allows for listing and trading of several assets. So to that extent, you'd find sometimes an exchange lists tokens that were already listed or issued that are already listed on another exchange or issued outside of the exchange. Yeah.
Okay. So in a situation where you actually know both custodial and custodial lines, which category do you fall under? If they give out to them right to lens.
There is no license for non-custodial wallets. Non-custodial wallets are not vast. They are not regulated. Yeah. You just need to apply license for custodial wallets. The only catch is that if you're doing on-ramp and off-ramp, then your services need to be linked to a custodial wallet. Yeah, but just like the global jurisdictions have done non-custodial solutions that are yet to be regulated. Yeah.
We're using an issue and use stablecoin, but you're using your own licenses. We use a stablecoin.
For example,
For example, you're using more USDC,
using SDC to do it.
looking for those transactions.
What exactly are they using?
We can go to hold the money you're to transfer your money that you have.
So you're providing a solution for users to hold their stablecoin.
Yes.
Then you're a custodial service provider. The headache of applying for the stablecoin licenses I risk that USDC has to get up. But your solution is what? Custody. Then you're a custodial service provider. Yes.
And what are tokenized deposits treated as stable coins? Are tokenized deposits treated as stable coins or RWAs?
Tokenized deposits, tokenized bank deposits, right?
Yes.
They're treated as RWAs, not as stablecoin.
RWAs.
Yeah.
Okay.
So sometime back, we were building platforms were now peer-to-peer. Then, for example, you have stable coins, they want to get fiat, then you can just list your order, then get fiat like peer-to-peer trading. So does that fall under VASP because there is an escrow part where we have to hold the stable coins to receive the fiat.
So it's a platform where users or other consumers can meet other consumers. That's an exchange. That's an exchange. So if you're providing an open platform where users A meets user B and they trade or exchange value, that is an exchange. Any further questions? Okay. So yeah, so as I pointed out, so these are just vast regulations, but as you build your product and as we prepare for this wave of licensing, we need to think also about other regulators and other regulations involved. I'd already mentioned AML, which is under the Financial Reporting Center. So in as much as you need to obtain your VASP license from the CBK or CMA, as long as you are processing money, then you also need to report to the Financial Reporting Center. So what does that mean? Unfortunately, that means that the no KYC solutions would sort of have to be curtailed. So for those of you, especially providing on-ramp, off-ramp with zero KYC, it means you'll have to get full KYC. So for you to satisfy the regulator of compliance with ML obligations. Data protection, yes. Now, because you're correcting users' phone number, names, ID, date of birth, and so on and so forth, then you'd require to obtain data protection compliance. Tax, there's an element of digital asset tax, which again, you will have to be liable for. So for payment processors, for instance, the tax is a 10% excise duty on the fees you've realized. For tokenization as well, because the digital assets, again, if the tokens move, then there's if fee has been realized, then there's a 10% digital asset tax on the transaction value. Apart from that, then there's normal annual corporate income tax and VAT if you're doing some services that are vertible and so on and so forth. But you just have to keep in mind that there will be tax elements involved.
So more about the traffic rule and its regulation can give us.
Awesome. So the principle, which is recommendation 15 and 16, I think, of the FAF guidance that we're supposed to follow, the travel rule basically means that if you're involved in a transaction as a financial institution, the source or origin of the funds need to be disclosed, but also the destination of the funds need to be disclosed. Now, normally when you're operating in traditional financial markets, it's easy to approach this because origin might be M-Pesa, where KYC is fully disclosed, and destination might be a bank account where KYC is still disclosed. I know you're asking this question because what if the destination ends up being a random MetaMask address or a random address where KYC is not disclosed? Goes to, because you're running a centralized exchange, there's an expectation that if someone is coming to, for instance, on-ramp, off-ramp platform, the client, while they're collecting KYC on the client, who is the source of the funds, they'll first of all have KYC on party A, is the source, but also now his client will have to disclose the destination of the funds and the purpose for those funds. You've already low-key seen this, for instance, if you're moving money from your bank account and you fill in the recipient details, you also have to give a description sometimes of purpose. And sometimes if you're sending over $10 million, that purpose has to be accompanied by contracts or invoices or other things to justify that. So same thing when you're offering on-ramp, off-ramp services or a custodial wallet, and somebody is receiving money into their custodial wallet. So similar to how if my bank account has been dull for the past 15 years, then all of a sudden I wake up in the morning and receive 20 billion Kenyan shillings. I'll have to be properly answerable to the bank for the source of that fund and justify. So same thing, speaking to the travel rule now, any money coming into your platform as a custodial wallet provider or as a VASP needs to be reported in terms of the source of the fund. And if it's going out, you need to have details on, or at least find a way to capture details of the beneficiary. Banks already do it quite well, but everyone moved to DeFi because they hate banks. So we've already seen the ongoing conversation on Twitter on whether regulations are just making players in this space look like banks. Unfortunately, because the risk, and painfully, yes, the level of KYC compliance for that will almost be close to banks. So that is the context for the travel rule. So to that extent, there's a lot of onerous reporting requirements in the regulations that you've seen. There's daily reporting requirements, monthly reporting, quarterly, on the transaction volume, the source of the transaction, the destination of the transaction, and the flagging of suspicious transaction reporting, and so on and so forth. Any other questions? Yep.
Oh, the KYC compliance. On the KYC compliance, for example, the oil platform that you mentioned, if the source and destination are already, let's say like on a farm who are already compliant, you still yourself have to be compliant and give up on that.
Yes, as an institution, as a licensed institution yourself, you also have to retain your own KYC standards and onboarding. It's similar to, for instance, banks. When even though I already onboarded onto Bank A, if I went to create an account in Bank B, they'll still have to collect my KYC because the customer relationship is with them. They do not rely on third-party KYC. Okay. Now, licensing eligibility requirements, which again created some sort of a challenge. It has been a point of ongoing conversation, still is a point of ongoing conversation because some of these requirements were very onerous. Number one, of course, you need to have a local company incorporated in Kenya. So any VASP needs to be a limited company. You cannot apply for a license as an individual or as a SACCO or as a chama or as any other thing that is not a limited company. So bottom line is the company must be a limited company. Now, because it's a limited company, it will have shareholders, of course, and it will have directors. How many of you are sole founders in your company with no co-founders? Do you have directors, other directors in your company, or you're also the sole shareholder, sole director? One man shop.
Okay.
Okay. Awesome. So yes, because we are dealing in financial markets, and as I said, financial markets pose consumer protection risk, an economic and monetary policy risk, or an ML risk. The standard that has already been set by the governance standards have already been set by the Bank of International Settlements, which CBK actively is a part of, by IOSCO, which the Capital Markets Authority are a part of. There's global standards of sometimes how governance needs to look like, and the same way how ideally governance that DAO will be. But the minimum number of directors in terms of governance structure is 3. So if you're a sole founder shareholder, you'll be the first director of your company, but you'll need 2 other directors to balance out the governance risk. So director number 1 will be the sole founder shareholder. Director number 2 might be an active executive in the company, the CTO, CFO, or an investor as well. Then director number 3 will be an independent director who is neither an investor, not an employee, not a consultant, not your father, your brother, your mother, not just an independent, neutral person that will be able to fact check your compliance or fast check the kind of risks you want to take. So for single founder companies, then again, as part of licensing compliance, a lot of thought has to be put into the board structure. And as I presented last time, all these directors, members of the board, have to pass a fit and proper test. That means if they were involved in the recent DCI investigations that are happening, for instance, or they were involved in any other illicit activities or were flagged somewhere, have a record somewhere, then they will not qualify. Of course, they must be over 18 years. Whether they're Kenyan or non-Kenyan, it's not that restrictive. You can have non-Kenyan directors and non-Kenyan co-founders. For shareholding, still an ongoing conversation, but the regulations capped the maximum shareholding per shareholder. At least the maximum shareholder should have a maximum of 33%. The rationale for that, I mean, this is what they already use in a lot of capital markets regulated companies like ISPPs and fund managers, but it's just to curb the centralization risk of one person collapsing with consumer funds. I believe you've seen the cases. I think there was an incident where a Canadian founder went, I think, to India or Europe, then disappeared with about $300 million of user deposits, and they were in control of everything. So such kind of risks is what the regulator wants to cap. That point is a point we've been actively pushing back on because of the diverse nature of how some of these companies are built, and because of the funding structures that some companies have to negotiate with investors when seeding equity and receiving funding. And some people actually are not giving out equity in their company, they're doing token issuance in their company. So you'd find that one person, one company is the 100% shareholder, and no equity is being distributed in the company, but it's tokens that are being distributed as consideration for investment. So it's a point of conversation we're still trying to advocate for with the National Treasury Technical Working Group. We hope and trust that they will be open to more brilliant ideas that can open up the economy. Now, in terms of comparative analysis for those 2 points, I just want to note that Kenya alone is the one that has that kind of restrictive requirements. South Africa, which has been one of the leading markets in the space, was pretty much more flexible. There's no restrictions on how much you can hold as shares or with regard to directorships. Hence why we've seen some local Kenyan-founded companies already obtaining South African licenses. With regard to penalties for non-compliance, it's about 3 million. Okay, Kakai is saying as a Canadian, she's super ashamed of, it was Quadriga CX, yeah. With regard to penalties, again, if you do not comply, you will be hit with the penalties or civil or jail term. So whichever applies. Apart from the directorship, which I've covered, and the shareholding, which I've covered, the most recent updates also extend to risk departments, compliance departments, audit departments. Again, back to the rationale that we are dealing with the financial sector that poses consumer protection risk, monetary and economic policy risk, and ML and counterterrorism financing risk. Then your risk and risk management framework has to be very, very, very robust in the sense that number one, audit standards. So if you're running an exchange, then you would require to have an external auditor who is able to audit your volumes and audit your books of accounts and also your order book for the exchange. So that is external auditor. You also be required to also have an internal accountant person, might be part-time, but just somebody who can give the regulator certified books of accounts. Apart from that, compliance officers requirement, this is because of the AML risk. Not a full-time role, but you all just need to have a compliance officer in call in case the Financial Reporting Center calls upon you to report on transactions that happened on your platform. Now, from a high level, it looks very restrictive because again, the whole idea of us coming to build in DeFi is permissionlessness and freedom. But again, number one, pointing out the risks and the rationale behind some of these things to some extent justifies that. But for those of you also who have been part of DAOs, know that technically some DAOs have that kind of risk infrastructure. They might not call it, it's not a regulatory requirement per se, but for some DAOs to grow as big as they are, you've seen, for instance, like Arbitrum, they'd have a security council that deals with security and cybersecurity issues. They still have some, for instance, like MakerDAO used to have a strategic finance core unit that will deal with accounting and will work with external accountants just to making sure that if we are saying that is backed by all these assets to a tune of 2 billion USD, then the books of accounts have to make sense, the financial plans have to make sense, and all these things have to make sense. So the learning here, is that a lot of decentralized protocols or DAOs, as you know them, for those of you who have interacted with them in the inside, already have some form of risk and governance structures. They're decentralized, yes, but they have developed units and councils that allow them to manage that risk. Hence, why they've been able to scale as big as they are. Anyone who has scaled very big, very fast, without proper risk and governance structure, has also collapsed very fast. FTX, for example, where after audit it was found out that they were commingling user funds and the internal funds and just doing whatever they had to do with that. So of course, hence the reason for an independent auditor is to make sure that as an exchange, your operational funds are segregated from user funds. So any question with regard to compliance requirements? Yep.
The license passporting apply for us provision that recently Rwanda and Kenya agreed the license passporting.
Thank you very much for that question. And I remember when we were having the session with Ambassador Pigo, the Special Envoy of Technology to the Office of the President, that is one thing we are advocating for actively, because in his docket as the ambassador, he can initiate diplomatic conversations for some such kind of arrangements. The license passporting arrangement you're referring between Kenya and Rwanda is exclusively on payment service providers licenses. As the conversation develops, the question now becomes whether a stablecoin payment service provider can also be absorbed into that arrangement. So it does not apply for VASPs yet, but there might be room to incorporate at least some VASP activities. Not big activities like exchanges, like I think payment processing might be, and on-ramp, off-ramp, which is almost like payment processing, might be a good avenue to explore the license passporting conversation. Another conversation around passporting that is a twin brother to license passporting is reciprocity. So you see, for license passporting, you have to go through the full arc of doing an MOU with Rwanda for you to recognize the licenses and for them to recognize ours. But the principle of reciprocity, which we're also pushing for through all of various channels, allows for somebody to recognize an asset out there without necessarily having a mutual MOU. For instance, the question he asked on foreign issued stablecoins like USDC, USDT, will they be required to obtain Kenyan license? Technically, as regulations are, yes. But if those reciprocity arrangements whereby the provisions for the regulations provide that the regulator shall recognize non-Kenyan shilling stablecoin issued elsewhere, then no need for passporting, just a reciprocity framework. So for instance, Machuche's NTZ, through a reciprocity framework, it can be recognized in Kenya, and Kenyans and Tanzanians in the Namanga border can interact with a Kenyan shilling stablecoin against NTZ without the need of either of them having to obtain local licenses because of a reciprocity framework that we are pushing for. So same thing applies to CNGN, applies to South African stablecoins like ESA, and most importantly applies to stablecoins like USDC. Any other question?
Question. The actual cost of the license, what your conclusion is, the other question is for KYC, most of us traders using outside infrastructure, like let's say Samsung for KYC. Do we need to like use existing or local KYC method? The reason why we are doing that because of need for processing KYC. So
good question. Cost of licensing, I'll cover on the next slide. KYC is actually more advisable that we use third-party KYC infrastructure just to avoid the centralization risk, whereby in case you are hit, then also the user data is exposed. So yes, SAMSAP is a well-recognized third-party KYC solution. Same extends to wallet screening and transaction monitoring. If you can use TRM labs or chain analysis for wallet screening and transaction monitoring, makes it easier, because again, that is a solution that regulators will be mostly familiar with. With regard to fees, I'm going to cover that in the next couple of slides.
So the question is, I'm hearing about payments a lot, but I know that was other spaces that not much people. Are they covered?
Okay, allow me to go back to. Okay. That's a good question. Maybe you are not in the room when I covered this. It's important to understand what exactly we are as builders. And the fact that you're building in Web3 or blockchain does not automatically make you a fast. So again, to cover what I had highlighted earlier, for those who have not arrived. Number one, virtual asset service providers are as defined in the Act. So yes, most of them borderline payment solutions actually. And even the regulators who are regulate this are regulators who mostly regulate payments and financial markets. So either you're doing wallets that allow to hold people's money in stablecoins or in whatever virtual assets. You're doing an exchange that allows for exchange of money, which is in virtual assets, stablecoins, and so on. You are a payment processor. You're a broker taking people's money and giving them virtual assets or connecting them to markets, and that do that, like the P2P market Dalmas was talking about. You're an investment advisor. You're giving people alpha at an institutional level, not at a small scale group level like we do here. At an institutional level, you are telling Steamer Circle that they should put 30% of their portfolio on staked Ethereum. So institutionally, you're providing strategic investment advice. Then you're an investment advisor. Asset offering, you're doing an initial coin offering, selling coins to people. They give you their money, you give them your coins. Tokenization, you're providing tokenization infrastructure for allowing issuance of tokens, and you're receiving money considerations in return. Token issuance platform, same thing. Stablecoin issuance, you're issuing stablecoins that are used for payments or are used for savings or so on and so forth. It was important for me to re-echo that for the benefit of you and others who are not coming, and to conclude that you've noticed in every line item, it's touching two things: money and you soliciting users. So it's money and it's not your money, it's people's money. So it can play out as money for payments, money for investments, money that is being traded, but it's a money bill. It's financial services. So money then it becomes financial services. And because it's financial services, as I pointed out earlier, it has monetary and economic policy implications. So hence why the VASP Act only regulates that. Now, to my middle row now, if you're building other blockchain, DeFi, and infrastructure solutions that have nothing at all to do with holding people's money, you're not soliciting for money from users. You're actually even not holding users' money. You are like building a ticketing platform that allows people to buy tickets as NFTs. You're just the same as Ticket Sasa and so on and so forth. Or you're building a ride-hailing solution. I've seen decentralized ride-hailing solutions recently, whereby it's like Uber, Bolt, and it's built on blockchain. That is the only difference. Then you pursue the regulations that affect them. If you are building a Circle solution, like Vuza, who are building a Circle for blockchain users, or you're building a savings platform, then you're not a VASP. You either pursue the relevant licenses that your services are linked to, or you're just an infrastructure service provider. Does that answer your question? Oh. So yeah, let's go to capital requirement. Oh, there's another question. Oh.
Signing this in the solvent, you still have the servers in Europe. As long as you have a license.
No, yeah, you can still. There's no explicit requirement for localization of servers. The only requirement is localization of reserves. So, for instance, if you are an exchange, to some extent, you need to have reserves dedicated and segregated for Kenyan users. Might be on-chain, but at least from an accounting and reporting perspective, there needs to be some demonstration that those reserves are segregated to protect Kenyan users. Oh, also, as I pointed it out earlier, just scroll back a little. Apart from Now you're talking about data. So data protection, in the event that, just to reiterate, in the event that you are collecting user data and processing that data in one way or another, then you also require to get a Data Controller or Data Processor Act. And now that you mentioned Europe, if you are hosting that data in Europe, then you also need to comply with the GDPR. Sorry, is there? Oh, there's a question up there. There's a question. Sorry. Okay, now let's go to the money clauses because that is where the biggest headache has also been for builders. Okay, now that we understand the difference between VASPs, so if you're building a healthcare infrastructure on blockchain, you're not a VASP, so you said an infrastructure service provider and other services. Now let's go to capital requirements. These capital requirements again only apply to VASPs. So if you are not a VASP, like you are Web3 clubs and we just run Web3 developer communities and education, we're not a VASP. The best we can get is a college or an institute license from the Ministry of Education. If we want to. Oh yeah, or TVET, get a TVET accreditation stamp. But a VASP are those people that are specifically listed as VASP. So we start with capital requirements. Okay, there's application fee. Okay, let's start with the fees first. There's application fees, licensing fees, and renewal fees. We are still actively pushing back against some of these fees because they are significantly high and do not make economic sense to some extent. So application fees about $750, 100K shillings. And then after your application is reviewed and your license is ready for collection, you pay a licensing fee of $4,000, which you have to renew annually. That is for wallet providers. For stablecoin issuance, I think it's the next page. Also, there's wallets. For payment processors, same thing. $800 application fee, $1,600 license renewal fee. So they're, I would say, pretty favorable, but yeah. The highest of these fees come to capital and liquidity requirements. And we will start with now wallet providers for those guys with custodial wallets. It's about 150 million Kenyan shillings. For non-Kenyans, that's about $1.35, $1.4 million. So capital does not mean money you pay to regulators. Just means money you have in your bank account or on your custodial wallet to demonstrate that you're able to take on the business that you're applying for license. So to some extent, the rationale for this again is the regulator wants to be convinced that the businesses applying for licenses actually intend to kick off and do business. So it's your money, but you just need to show that you have that money. But that's paid up capital. So because it's your money, it means some of that money can already be used up. The only liquid capital you need to have is now 30 million Kenyan shillings, which is about $230,000 thereabouts. But the paid up capital basically is your company must have raised or must have been valued at about that figure. So that is for wallet providers. For payment processors, as Jordan, paid up capital is about $400,000. You need to have that in your either in your wallet somewhere or in your bank account. Just demonstrate that. Yeah, you just demonstrate that you can support the liquidity needs for the on-ramp offer. But the liquid capital, what you need to have, so paid up capital is what has been injected in the company. So liquid capital is what you have in liquidity. 10 million Kenyan shillings, which is about $80,000. Around $80,000 in liquidity. So $80,000 liquidity, but your company must have raised $400,000. But we are pushing. Sorry. Oh, comments and feedback. Yeah. Okay, so
So what's up with the raising? What's up with that?
you need to demonstrate that your company has the financial muscle to do that. So, for instance, let's say you're an on-ramp, off-ramp provider trying to process 1 billion Kenyan shillings a day. You need to demonstrate that, you've interacted with this money before. So, hence, paid up capital of 50 million Kenyan shillings. It's just a thing of you've demonstrated that the company's valuation, and to some extent, so whether you've received grants before, so any form of capital you've raised in terms of seed capital, grants, that total up to that for the last 3-4 years, and you can account for in an audit statement, qualifies as paid up capital. Doesn't mean you need to have that money. Just means over the course of your business operations, you've raised this money, you've used some of this money to pay expenses, but your company, as a going concern, has a paid up capital minimum $400,000.
And what about volumes? Volumes come?
No, the volumes are customer funds. Volumes are client funds. Now, so for instance, now to echo on paid up capital, and maybe Bill might correct me on this, because so paid up capital is the capital that your company has raised. So to that extent, which I like Bill's input on, is say during the grant boom between 2022 and 2023, you got an Ethereum Foundation grant of $50,000. Then you got a Stacknet airdrop of $100,000. Then you got a base grant, a near foundation grant, because a lot of you have been recipients of that grant. Then that combined with some equity capital you raised at a seed round of maybe $10,000. If you can demonstrate that in an auditable way that a CPA can audit, then that qualifies as paid up capital, because you just demonstrate that over the course of the last 2-3 years, my business has raised this amount as paid up capital and expensed this in this way. But now the liquid capital is what you have in liquidity, what you actually have in your bank account, which is $80,000. Now the challenge is, I know a lot of you are receiving those grants in various tokens and in on-chain wallets. So the question is finding an accountant that will collapse all that DeFi chaos into reportable accounting standards. But maybe you'll have an input on that. Paid up capital versus liquid capital.
Yes.
Just a minute. Yes.
So paid up capital, usually when you're registered in the company, you have your DeFi it's LTD, and there's usually the number of shares that you say you would want the company to have, and then you give it a valuation. Now that is capital. If
Need to office it.
if you don't pay, let's say you say that I have 1,000 shares, each valued at 10 shillings. It means that your company is now at 10,000. Okay, let's say 1,000 shares at 100 shillings. It means that your company is now at 100,000. Yes. If you proceed with the company without actually injecting that 100,000 into the company, that is unpaid capital. So it means you actually owe the company 100,000. Now, what this law is saying that we have a paid up capital of how much?
$400,000.
$400,000. Now that means that you actually need to inject this money into the company so that the value of your share is equal to or more than that 400,000. So that is what that means. So that's a paid up capital of at least $400,000. Of course, as Allan has stated, we are actively fighting against those numbers and we're going to lower them, because not every day you run into 400,000. But yeah, that is what it means. So I'm also aligned with what Allan has been saying, because if your company has been interacting with this money and you use that amount of money, that actually means that the capital that you use in your company is like under $400,000. You can actually account for it, but it's just money to be injected into the company.
Yeah. Yes, Lance?
Can we see the transaction or the license fees again?
less.
So this, for the number 8, 9, and 10, it's a license fee of 200 mil, 500 mil?
No,
Those different numbers.
number 8. This doesn't this. No, this I think we moved these are capital requirements. Sorry,
Oh, okay, cool.
those are capital requirements. So yes, another concern actually on capital requirements. Thanks for raising that.
I have a question.
Another concern we raised on capital requirements actually is on ICOs. We all know the whole idea behind ICOs is actually to raise capital, raise money. But one interesting thing is that the regulations required somebody who wants to do an ICO to have paid up capital of 200 million Kenyan shillings, about $1.8 million thereabout. So it's something again we're actively pushing against because the whole rationale and the idea of ICOs is so that you fundraise. And companies that are doing IPOs, for instance, in the Nairobi Securities Exchange, do not require to pay up capital. They just need to have good books of account, yes. But it's something that we are actively pushing against. Yes, yeah.
What if you decided to run the bank who has a custodian instance, or an asset manager who already has a custodian bank, and all that infrastructure?
Okay.
That's
yeah.
allow you to.
Yeah, let me go back to the slide. I think what I've noticed is that the heart of a lot of the discussion in the community is this slide. I think Ochi should just frame this slide and put it on a wall somewhere because there's still that.
Yeah, please do.
Because Ochi calls me every day about that. Like, what's the difference? So you need to know if you're a VAS or if you're an infrastructure service company. If you're a VAS, is when you need to meet those capital requirements. If you are selling technology solutions to whoever wants to use that technology for their purpose, then they take on the risk of applying for licensing and all that. For example, Ripple, one of our key partners, partnered with Absa Bank in South Africa to provide capital infrastructure. Ripple are just providing them, just selling the Ripple custody solution to them, but Absa takes on the risk. Same thing what Cyril is doing. You might run into an investment bank that wants to buy the custody and tokenization infrastructure from you. You sell it service level agreements, then they take on the risk of doing that. So if you are a blockchain infrastructure solution, you do not need to meet the capital costs. That only applies for someone pursuing the vast business.
So for those ones, we want to advance how much
Yes, so the capital requirements, as I said, with good accounting, again, think of someone who has been receiving Solana Foundation grants over the last 2-3 years. With good accounting, if you can show the funds came into the company and they can be accounted and expensed as paid up, whether they came in form of grant capital or equity capital, that counts. Just need a very cracked autistic accountant. Yeah.
Yeah, I have a question. No, a comment and then a question. So one of the reasons why most of us are actually doing is because we are having to get organization. Now, I feel like we are suppressing the build as to while actually building the consumer protection. Before we are builders of consumers. That's why we are building. I feel like we are putting a lot of stress onto the builders, various aspects, like especially local builders. International builders or companies can be able to afford this requirement for us, big of a challenge. The question then, another question now I have is, who do we pitch? Is it the CBK or is it the CFA for different class? Yeah.
Question.
Okay, let me assist you. I think we're trying to nail this point and stand on line.
Okay, please, Master Cheng.
So let's look at Minister, right? Minister is offering services to send money or from another way. So now, Minister, his worry is that, okay, he won't be able to somehow meet his capital requirements because his mind is advanced. See, the problem we have as a group of people is that we just think in terms of tag and token and stuff. And that's living that bubble is kind of a problem we have. What Allan is saying is, Minister needs infrastructure, right? And he needs stable coins, okay? And he needs the stable coin issue, and also the
Payment processing.
and it's payment processing, right? So what Minister needs to do, Minister essentially is not a person, right? No, feel like a person because it's dealing with total that he's not a person. So what Minister needs to do is to partner with someone who's issuing stable coins, who is licensed, right? So the liability of being a stable coin issuer is not on him. That's on Equity Bank or whoever else will get that license. Most of the services that he requires, you have someone or some entity that is already licensed for that. So what Minister needs to do is to kind of really be clear on what exactly he's doing, right? So he is facilitating cross-border payments and things like that. Right? So he essentially is not subject to those things.
Yeah, I also have a part of answer to this question. So thanks, Ochi, for that. Which is this slide, which is echoing again. It is which is sad because maybe unfortunately the joy of just building is almost interfered with, because sometimes you would build a solution whereby you are doing custody and they're the one doing all that on ramp off ramp, and you allow users to stake, then they can. There's a lot goes on in hackathons, you know, and and the reality becomes when you want to roll out, which I think when you're chatting with Tricks ago saying, when you want to roll out the solution out to Kenyan users, now we are away from hackathons in production. If a regulator, or if I was walking on Gong Road and I saw a billboard of your company, what exactly will you be selling? Yeah. If I was walking on Gong Road and your company was had put up an advertisement on a billboard, what, as a Kenyan user, what are you selling to me?
Well, on and off services.
So on-ramp, off-ramp services so you technically exchange. So you take Kenya shillings from them. So you give them stable coins in exchange Kenya shillings and vice versa. So you are on exchange. Yeah, then you fall under this category. But what Ochi is actually also saying is that sometimes if your service is an infrastructure service that already interacts with already licensed entities, like you are providing infrastructure to someone like PesaLink, or providing that on-ramp, off-ramp infrastructure to an already existing company that holds the license, which is also the example I was giving. And then you're just an infrastructure service providers, then they take on the licensing risk. But in one way or another, you'll be in a situation whereby you have to offer it as infrastructure to a licensed party, or take on the risk of licensing yourself. The number two, to your point, which is on the feedback of tiered licensing. So when we were talking to the National Treasury Technical Working Group, even in our conversation with the Office of the President, Special Envoy on Tech, and all those other regulators, it's something we proposed. So what we proposed was a tiered licensing ladder, whereby bigger companies that intend to process up to like 100 billion Kenyan shillings a day are in a different category, and that they meet the kind of licensing, guarantee, and insurance and risk requirements that allow for them to process 100 billion a day. But if you are smaller company, you're a mini company, and only processes $80, $100 transactions to a tune of maybe maximum $5,000 a day, then what we're advocating for is like a startup company category. So whether or not those considerations will be taken into account is subject to further discussion, but it's an ongoing discussion we are advocating for.
Is it under CBK?
Depending on what your service is. So as you say, as you can see, if your payment processor is a CBK, but if you are a broker or your wallet provider, you're a CML. So depending on where your category is.
Follow-up question. So if you do merchant payments, that is different. Is it where your company may make all different types?
What is merchant payments?
Like you're doing merchant payments, say you have companies using the infrastructure.
Like shops, payments, machines.
Like the way deals and this, they are using infrastructure from companies, but we are local companies. Let's say we are offering services to them. They are using our infrastructure. So we pay for legal services.
So you need to think about this. Are you custodial or non-custodial? Right? So if you're custodial,
Yeah.
so just think about what is my bill. I mean, you're offering services to merchants, that's okay. The regulators don't really care. They just know that it's
What risk are you posing users?
I think a good point to note when you are dealing with demand services and virtual assets included is that if at any point in time you have access and control of user funds, there's a high possibility to be managed.
So for instance, if all merchants in Kamukunji market were holding their money on your platform, totaling up to 1 billion Kenyan shillings, if your platform collapsed, will that mean the whole of Kamukunji market will collapse? This is how regulator thinks. You're doing merchant payments, right? And wasn't toy market across here. All the merchants in toy market are using your platform for their account, for their receivables and their expenses. If your platform was hit and 1 billion shillings on your platform collapsed, will that mean the whole of Kamukunji market has collapsed? Your platform has just lost Kamukunji market 1 billion Kenyan shillings.
The markets have their
How?
where they have control.
it's non-custodial.
It's not custodial. Okay, if it's not custodial, then you do not need a license.
Okay, my question is, for international companies, does it also apply, I guess we are just further, does it make sense to have a company in this like this is South Africa, then like
Yeah,
That is a
it won't
very good question.
it won't make it easier, but under the licensing track, there's if you're a foreign company, you can come and register a subsidiary of the foreign company, or another company is actually allowed to just allow for recognition to a foreign company here. But that isn't as far as company incorporation is concerned. Above and beyond that, all other requirements that follow apply to you as well. Whether the requirement for a local physical office, you'll need a local physical office, the compliance officer requirements, the electorship requirements. So all that you need. The only difference is, yes, a foreign company is recognized. Period.
But yeah, if you're serving Kenyan citizens,
Scope of application.
then you have to be registered in Kenya, and you need to have a Kenyan office. So if of course you know that you can access an exchange from anywhere. In the same way, you can access a betting site from anywhere. But the idea is if you are running a betting site, a betting website that targets Kenyans, then you need to be licensed in Kenya. So similar to the virtual asset service provider. If you have a company in Mauritius, Seychelles, whatever, and you're targeting Kenyans, then you're doing so illegal if you don't have a license. And the regulator can actually go after the running back to have.
That's actually a good question because even speaks to the thing of ICOs, stablecoin issuance, and a lot of non-custodial products. So for instance, if it was an ICO and you issued your ICO in Kenya and you're distributing it actively and aggressively to Kenyans, that means I'm seeing your ads on Ngong Road, on Thika Road, on Mombasa Road. I'm seeing your ads, buy this new token. And also when Kenyans are interacting with you on Instagram and TikTok and all that, you have Kenyan influencers selling your token. And then that definitely the Kenyan regulator would.
No, that is not what is there.
So if you're not, yeah, actually, that's a good point because if you're doing an ICO and you're not aggressive about it, and as a matter of fact, you even do a notice in very small font on your website to say that these tokens are not sold and available to Kenyans.
So
People have done that with American
there's
tokens.
something called reverse solicitation. But anyway,
Yeah.
Kenya, it's not much applied. But the thing is, if you're not aggressively selling it to Kenyans, let's say you're from Uganda, for example,
Yeah.
and you just need an ICO in Uganda, and you're not aggressively targeting Kenyans, then as a Kenyan, I just happen to gain access or find out that there's this token that has been released to Uganda and I buy. Then you don't really need to be licensed in Kenya because you are not aggressively selling to Kenyans. It's the Kenyan who has been proactive and actually found me. So you did not solicit Kenyans. So the Kenyans that found you. For that, of course, you don't start finding ways of Kenyans to find you.
So here's what I was telling you. So for instance, if you've seen some DAOs and some token issues out there and you go to their platform when they're doing ICOs, they specifically put disclaimers there that these tokens are not available to citizens of the US or anyone resident in the US. But we know that there's a lot of agents in America who find ways to participate. So you just need to, by all means, take all legal measures necessary to protect yourself. But if somebody went above and beyond using VPNs and explored in their own private capacity, you cannot speak for them. So it's a different case. And strictly speaking, also honestly, is that the regulator will not be so keen on people who are less aggressive, like the ones that are the noisiest and the loudest will the ones that would capture the most attention.
I usually like comparing it to betting, but also betting is almost random. If you see the betting industry, a platform like Stake.com, Stake is not licensed in Kenya. But if I want to use Stake, I can. So they're not targeting Kenyans, so they don't buy a license. But a Kenyan can very much access to our website.
Yeah, we just have the bad luck of maybe being in Kenya and maybe Kenya being the first market where your product launches. But honestly, I mean, we've had people launch DeFi protocols in more regulated jurisdictions, like Morpho was launched in France by the French team, and they actively did it very well. Of course, they don't fall under any regulatory regime, but there's still opportunity to build DeFi solutions and market it within the DeFi ecosystem and have access. Putting yourself in the box of vast requirements can be restrictive to innovation. So you can still build beyond Kenya.
How it need to come up as a solution and
No, as long as a limited company, it might be a limited company with so the consortium can structure itself into a limited company.
So different players so that you want to raise the capital requirements. So is there a way that is the set up one kind of
Oh, we see the same.
big company and apply as limited by shares positions?
Actually, that's an idea we've been thinking with Alex. Yes. 5, 6 startups, 10 startups, all startups in this room can come together, contribute to a pool, and incorporate DeFi Clubs Limited, under that DeFi Clubs Limited, apply for whatever license you want to. The only disclaimer is that because you're sharing the same parent license, now all of you absorb the trust. Because now the whole idea of licensing is trusting that you'll do good by Kenyans. So if the 10 of us are coming together to jointly lean on this license, it means that if person number 9 messes up, the license is cancelled and the other people lose their license. So you need to be very careful who you are forming that consortium with, because as we have seen in this community,
Yeah.
sometimes it never goes the way you expect.
But that we covered the subscription. That you can use misbehaving for the participants.
No, the memorandum of association of the company only governs governance of the company, does not extend to their conduct and licensing obligations. Yes, there might be internally, which is right, infrastructure and contracts to govern indemnities and liabilities. But you see, if we've had a guy number 10 building a solution, then the solution goes bust and loses $1 billion shillings of Kenyan capital. From the regulator's perspective, it's that licensed entity that has lost the money. So if there's anybody liable to pay $1 billion shillings to Kenyans, is a licensed entity. So between the 10 of you, you have to have very solid structures to figure out how that liability is absorbed and how the rest of you continue doing business. That is actually a brilliant approach to easing out the licensing cost.
And the last thing I had question was, where does this place us respect to banks? The banks are able to actually bring together the capital required, put together all these things that are faster way than a startup. So did mean that people should look for jobs in banks?
No, that's a brilliant question. That's a brilliant question. Hence my last slide. Number 1, I'll start with your question, which is something, there's an advantage that all the brains in this room have that bankers and PSPs and a lot of those guys out there do not have. The advantage is the brain power and the genius to innovate. All of us are here because we were brilliant in our own capacities and we broke away to the matrix to innovate. So in as much as a bank might have, or a fund manager might have a fund management license, only someone in this room can spin up a MOFO strategy for them and help them create MOFO vaults and all those pools for lending and all that. As much as a bank might have a stablecoin strategy or no, a stablecoin license, it will take someone in this room to execute that stablecoin license for them. So the perspective was, number 1, the employment path has always been the path of least resistance. So there's going to be a lot of massive employment opportunities for CTOs and smart contract engineers and CFOs and so on. A lot of you are already employed in elsewhere. So migrating employment will not be a problem if you're already employed. There'll be competition for it. I'd say that, you remember between 2016 to 2019 when Andela was popping up and Moringa School was popping up, there was a big, massive run for Web2 Python engineers. And Google came to set up shop in Kenya, Microsoft, Safaricom, Trigger Foods, all those guys. So I made a very estimated, calculated guess based on the contextual intelligence you have, of course, is that from next year, actually from mid this year, there's going to be a massive run for smart contract engineers who are able to build stablecoin solutions, tokenization solutions, and any solution that just requires interacting with on-chain, the whole on-chain ecosystem. So there'll be massive opportunities for that. So that is if you want to pursue as engineer, which a lot of you are engineers in multiple companies. If you want to pursue it as a company that is well structured, this is your retirement plan, and you want to do it as a company that will raise equity, partnership approach. Hence, when I was responding to Ian, I told him that is your financial institutions that have the TVL liquidity that some of you might be looking for. The assets, the AUM, the assets under management that you might be looking for tokenization solutions, the muscle to take on this licensing infrastructure, but they have no idea what to do and how to structure it. Selling software solutions for them has always been the best approach. Banks already do this. A lot of banks buy core banking solutions. SACCOs as well. SACCOs buy SACCO solutions and so on and so forth. So, okay, yeah. So the idea is, if your company is well structured to take on such partnerships, then that is the best way to go. You're the back end running the infrastructure, or the front end, they take on the licensing and the client risk. I'll have to cut it short because we will allow more people.
Thank you very much. This was very important. It's been difficult for me to operate in this lab here because of all the startups and the busts here. They feel like I'm working the system. Thank you for clearing that up. So you guys know what to do, right? Just about that. All right. So we have some friends in the house, some guests. I'll have them quickly introduce themselves. The next item on the agenda is to introduce Carlota. But before that, because I know that like town hall, community business might take a minute, and I don't want our guests to see us saying messy. No, so yeah, so I'll start with Una. So Una will just take like 2 minutes to tell you who it is, what it does, and why it's here. Well, it's not really on any kind of business, it's just traveling and chilling, and then yeah.
Hello everyone. My name is Muna, and I'm a recovering gambling addict. Okay, yeah, so I handle community for Monad, and I'm starting digging into doing BD and meeting also with founders in Africa as well, and trying to build into the ecosystem. And I'm so happy to be here. Been traveling for a bit now. I've been in Kigali. We had the hackathon in Lagos, and then I just moved. I got bored of Lagos, so I moved to Kigali, stayed there for a bit, and then came down to Nairobi. And with the vibe here and the number of builders I've met here, I'm thinking I'm like pushing my flight like way back. I'm really staying here longer than I expected. And I'm happy to be the founders and the builders here. And I can't wait to have a proper introduction with you guys maybe like some other day. And show you guys what we have for you as well.
All right. The next person I will force to come here is Jimmy. Give it up for Jimmy.
I'll just be from here, my name is Jimmy, software engineer. Yeah, this
Yeah. For who? For Jimmy. Yeah.
Unfortunately, we applied that the same as
Yeah, so the super team conversation is a thing. I think if we come together as a community, maybe easier, right? I know there's a bunch of Solana developers somewhere in Kenya. I only know Jimmy, and that's probably part of the problem, right? Is that they're just somewhere doing something, right? So we come together. All right, so the next person I'll introduce is Raj Mehta. It really took a lot for Raj to get here. I felt like I was in an interview. I felt like I was applying for a job in his company and I wasn't. But yeah, I qualified, and so now he's here. So Raj, come say hi to the people. So Raj is the world's youngest founder of an automobile company.
Oh,
I think he started this thing when he was 3 or 5 years old, right? Is it? Yeah, so Raj, kindly say hi to the people.
everybody is comfortable from here?
Yeah.
Right there. Or the. I need to hold this?
Yeah. Is it on?
No, yeah. So, hello everyone, and Jambo. I don't know much of the Kenyan culture, and I'm just here since around 10 days. And as my friend also introduced me, so very simple to find me on the Google. Just ask a question: who is the world's youngest founder of automobile company? And you get my name right there as an answer. You can take 10 seconds to Google it up and refresh your minds. And I'll deliver a quick session in respect of the time. I'll take 5 minutes, 5 to 8 minutes to address. And very soon we will be meeting up again when I'm back to Kenya. I'm not sure when, but maybe in next coming months. So I'll start with my introduction in a short, and then I'll give 2 new learnings for you. I'm sure you know the things, but you never had that perspective of the same learnings what you know. So friends, we all are founders, and we are budding up, we are planning to do something new. There is not required always to make invention. Sometimes you can innovate. You need to think about the same problem, but from the another perspective. Why I started my company, how the journey had started. So I was a 12-year-old boy, and my family had given me a bicycle, which we have basic mode of commute. But when I was facing some challenge that my commute mode was not affordable. For bicycle, I need to pedal. That cost my effort. And I was a very chubby, cheeky guy, so I didn't find it good to pedal every day. So I made that bicycle electric. I was 12-year-old. The journey started. I belong to a family with having more than 2-century-old footprints into the business. I come from India, Gujarat. Gujarat is the land where our Honorable Prime Minister Narendra Modi ji belongs to. Mahatma Gandhi. Maybe many of you heard about his name. He belongs to the same land where I took birth, and the same land is known for the business. Many of you knew here about Adani. I can't laugh, I can't be different reactions, but I can understand. But yeah, guy, he also from the same place. So that land is very special when it comes to the business. And I'll give you the 2 learnings what I said. I'll ask you some company names. You just need to say you know or you don't know. Okay. About the founder name. Okay. Or maybe let's make it more easy. How many of you know the founder of Apple? You can just raise your hands. The founder of Apple? Or if I say the name Steve Jobs? Many of you, like the moment when I speak this name, your brain have photo of that guy directly. Okay? Second name, different sector. Maybe we will try with different. I'll take example from 3 sectors, so you get very clear perspective, clear idea what I want to convey to you. So this sector is mobile industry. Okay? Apple. Apple founder, you know very quickly. You have that image in mind. Second, it's automobile. Okay? Elon Musk. Everybody know that? You are familiar with this name. When I speak this name, I'm sure many of you have imagined the picture of that man in your brain. So it is automobile. Third one, Microsoft, Bill Gates. As I speak this name, you can imagine, you can think about that face in your brain, right?
Yeah.
Now, I'll take 3 names from the same kind of industries, but which are very popular, older. But I'm damn sure you don't get the image of their founder on your brain. So when it comes to the Apple, I'll say Nokia or Sony. Everybody knows Nokia, Sony. You are aware with this name. But do you know the founder? Or you get the image of that founder? Second,
Toyota.
No.
Toyota, everybody knows Toyota, right?
But
Quickly, did your mind prepare that image of the founder? Take the third example, Linux, Ubuntu, Android. When I use this name, is it the same as like Bill Gates? Okay. Why? Now we need to discuss why. Are they in poor marketing? Do the Nokia don't know how to do market their product? Toyota is poor in marketing? No, they are doing good. But why the three companies are successively super good in very short period of time? The three companies, we all witnessed it grows in front of us. Tesla, it was not there when you bought. When we all bought, there was no Tesla car in the market. But now you know. Apple, iPhone. It was, Nokia was far before and then far early. But now, where is Nokia? So friends, the conclusion of this study, a short research, it is about the mind acquisition. Everybody is aware with the term called as market acquisition. When it comes to the business, everybody fight for market share. Who is having the more market share? Market acquisition. Everybody fight for this thing. But now things are changing. It's a psychology. When you are a founder, you need to focus on the consumer psychology. You need to first create the space in the brain of your customer. So how you do that? You need to connect the brand with your own image. When I speak this name, Apple, Steve Jobs, they have enough money to hire many of good brand ambassadors. They can hire Shakira. Why not? They aren't they? They can. They can put Michael Jackson, they can put any brand ambassador. But why not these companies? Did Tesla hire some brand ambassador? Did Steve Jobs have that? Microsoft? No. When the name comes, you see about directly the founder's image directly. And when I use these words, like Steve Jobs, Bill Gates, or Allan Musk, you see their images, not on the not relaxing on the beach somewhere. Where you see that? When I speak this word, Steve Jobs, so the image comes to your mind, addressing some people. Where you see the Steve Jobs, if you even Google Steve Jobs, you will see the image. He's introducing his product to someone. Maybe a mass of people is listening in. Okay. Why? So the consumer in today's time prefer the brand which is led by the founder's identity. The founders need to be on the forefront. They need to be on ground and face the real challenge from the market. As I am the founder, I want to introduce my scooters, my vehicles to the African soil. I can't sit in an air-conditioned cabin in India and decide what product is good for the African market. Unless I see you, unless I sit on the Boda Boda, I ride the Boda Boda around town, I don't know what difficulty that Boda rider is facing. As a luxury guy, I spend 20 minutes or 30 minutes sitting on the bike. It's comfortable. But the moment when I travel from Embakasi to here, I use Boda Boda, I know what's the pain in your ass. It's not easy. Okay, you can sit on the car, luxury, you can drive and make plannings on that car while traveling. That okay, we are making this bike. Let's make it $10 cheaper. Makes it more tough. It's okay. People will be adjust. Why they adjust? Let you be in that position and you understand how the things happen. So one thing what I want to tell you in the today's time, what the example what I just gave to you, that the market, first you need to create the space in the brain. Like the moment, how many of you use Tesla car? We are not using Tesla car. X was purchased by him recently. Okay. But the important thing is that even the people who don't use iPhone, the one who don't use iOS, they know Steve Jobs. Is it correct? Even you buy iPhone, but before buying iPhone, you know who is Steve Jobs. Steve Jobs, the names hit to your brain. So we need to do the same thing, whatever sectors you all are emerging into. I don't know, somebody's from IT, somebody's from software, somebody makes hardware, somebody's in PMS, or many things. But whatever you do, just make sure that your image is catered, is conveyed to your customer's brain. The second thing here is definition of achievement, because we all are young men, young people. And who will tell me the definition of achievement? Anyone there? Can try, just be free. What is achievement? It can be your own perspective. Anyone? Feel free.
Yeah, please. I'm curious to see. Yeah.
Yeah. Perfect. It's good. Everybody has their own perspective. So I'm open to listen to anyone more? One more. Hey, how we can be the founder? What we are doing here? What we are doing here? Ochi, what we are doing here?
I'm telling you, I deal with this all the time. It's
Expect them to be the unique on addressing such mass youth there. I never speak before. I swear to God, it's my first address to the public here. I did shoot some of the podcasts in the last few days. You can see me on the IQ Watson. Maybe you are aware with this man, IQ Watson. So you'll be seeing me with him in coming days. Maybe tonight, I don't know. The podcast is under editing. So how we can expect the people to use your product if the founders are not speaking up? First, you need to speak. Right? Is there anyone? Okay, perfect.
oh, there's someone there.
Yeah.
Using something that usually yeah.
Perfect.
Yeah, I want to contribute. So
Yeah.
it's like you have an image in your mind,
Yeah.
and then making reality to match with that image. I think that is achievement.
Perfect.
Yeah.
So I'll also express my perspective. The definition of achievement. Very simple. And I hope you will be also relate with this thing, what I speak now, with what I'm going to speak now. When somebody type your name on Google, someone type your name on Google, and Google shows your photo, okay? That's not your achievement. That's not your achievement. Many of you are like, yes, that's achievement. No, that's the Google's achievement. Because Google is smarter. When you ask something, Google is serving to you. Okay? So when you type your name on Google and Google shows your photo, that is not your achievement. That is the Google's achievement. Okay? But when somebody asks a question to Google without using any noun, in school we used to learn noun, some names, right? So when you don't write your name, so what you write? You ask a question. When you ask a question to Google, and Google bounded, must, need to answer your name as the solution of that search, that is your achievement. You got the point? If I ask Google, who is the president of Kenya? And if Google answer Barack Obama, what you will do next moment? Or change the search engine or maybe refresh. Google has some problem. Okay? But when it gives Honorable Ruto, then you say, okay, then let's find something more. It is how they get customer. What's Google's customer? When you search more, it's customer. You are customer to them. So if somebody asks Google, Raj Mehta, and it shows my picture, that's not my achievement. If somebody asks you, how is Raj Mehta? Who is Raj Mehta? You know him? And you say, somebody will say he's a good guy. Somebody says he's a bad guy. Because it's your own perspective. In English, there are very good proverbs, and I'll quote one proverb here. Beauty lies in the eyes of the beholder. So if I see something beautiful, it means my eyes, my sight, my thoughts are beautiful. My perspective is beautiful. Same way, police is good for you, but for thief, the same police is bad. So it's about the perspective. The things remain the same. So here, when somebody asks you, did you meet an entrepreneur? Did you know someone from automobile sector? Or did you know somebody, the world's youngest founder of automobile company? And when your brain says, Raj Mehta, it means I did my job finished. I came here to get your brain. Just tiny KBs in your brain. I'm sure in your life you won't be able to forget this thing, what happened just now. Very sure. You can't delete. I'm very sure with that part. But how it happened? Because I served something which you already knew, but you didn't have the perspective. You know, Allan Musk, Nelson Mandela, everybody, they have 24 hours in their life. God didn't give them 25 hours. Their body have 206 bones, 32 teeth. But why? What make them special? Because the perspective. The thing, the perspective, how you see the same thing in a different way, make you successful. So friends, hereby I conclude in the respect of time. Thanks everyone for listening me. And I hope if you are using on Instagram, if you are on Instagram, you can connect me as Raj Mehta India, or simply when you Google the question, you'll get my name as the answer. Thanks everyone.
Thank you so much.
Namaste. Jai Hind.
Raj, Nene,
What's the name of your company?
My company name is Greta Electric Scooters.
What does it,
Sorry,
what does it do?
we make electric scooters. Yeah.
So you bring them together?
Yeah.
Okay,
Very soon.
so are you going to work with the builders here? Or should they approach you?
We are not sure.
yeah, so,
It's just
so,
10 days.
So just a.
yeah, so we connected online
Yeah.
through a friend, and this is like an introductory,
Yeah.
this is the first time I'm meeting him actually.
I'm looking for the next time.
Yeah.
I'm challenging guys to actually be
Yeah.
proactive.
Yes.
And not
Yeah.
wait for you to open up the challenge.
Exactly,
That's what I mean.
exactly.
Yeah.
So there's guys in the room who are probably thinking that. So Raj, we have actually an IoT lab. We haven't really launched it, I would say, but it's upstairs. So we have two engineers who used to work at Coco. Yeah, you guys know Coco, right? These are the most brilliant people I've ever met. And so we're going to not only, we're going to design and build. So think about building electronics from inception. So far, we've done some business. We have actually fixed Bitcoin ATMs that were struggling. They were brought to Kenya and, they're just not working. So, so our guys took that like peanuts and they sorted that out. And so more announcements to come on that. Thank you, Raj. All right. Now, it's Safari's in the house.